We're taking a look at Moderna reporting mixed fourth quarter results, beating revenue estimates, but missing on earnings per share as demand for COVID vaccines weakens. This after the company slashed its 2025 sales guidance by about $1 billion in January. Joining us now, we've got Michael Yee. He was the Jefferies Biotech Analyst. Michael, good to have you back on the program with us. Just want to start off with your reaction to these results from Moderna.
Well, look, good morning. Great to be here. Look, Moderna remains in a very challenging position. We have spoken about this in the past. We downgraded this stock, I think, more than a quarter ago, talking about how revenue outlook continues to be very murky and the OPEX and spending continues to be so high and the cash burn is a problem. So the cash is $9 billion, going to $6 billion, going to $3 billion and downwards, and there's really no visible path to profitability that we would see on the horizon.
So if there's no visible path to profitability, Michael, then what does any potential bull case look like? You talk about a couple of potential positive catalysts, things like norovirus, but it seems like that's a little bit more long-term. What would have to happen to get you to buy on this stock?
That's great. So look, there are 3 or 4 programs that people are watching that are in phase 3. Oddly enough, I think it's important that we mention today that while there is the Merck cancer vaccine, the phase 3 CMV vaccine and the norovirus vaccine, the CMV vaccine has been delayed. The data has not hit, and they sound like they're pushing it out to later this year. And then on the norovirus vaccine, which is interesting, they announced a FDA hold due to a rare GBS event. So that was a big announcement this morning as well. So remains murky, but there are a bunch of things out there on the horizon that could be $1 billion. But I will tell you, we are cautiously optimistic at best on this.
What type of upfront capital expenditures are you expecting to bring some of those to fruition?
Well, look, the guidance that we see is spending $5 billion, $4 billion, $3 billion a year over the next few years. The question is, can the revenues get up from 1.5 to 2.5 to 3.5 to 4.5 to get them anywhere near that? So you're at this sort of trough level of revenues and at the peak of OPEX. And so they believe that they can get to profitability by 2028. We don't see that, hence the concern. And so that's the outlook. I think investors are probably figuring that out, but are still sleeping on it. And so, yeah, we still see downward pressure based on the outlook.
Michael, I want to switch gears a bit and talk about GLP-1s. And I know that you don't cover hims and hers in some of these names, but just broadly, how are you thinking about this administration's relationship with GLP-1s and specifically compounding GLP-1s and the availability of those cheaper compounded versions of these drugs to folks and what that might look like under regulatory pressure and how that could impact some of these stocks?
Well, first of all, we are quite bullish on the GLP outlook, particularly as it relates to Amgen, which reported great data. Lilly, which Jefferies has been bullish on, that's had a nice bounce. If you took a look at that in the last quarter, put up a good outlook. And so we definitely believe that there was a bit of a speed bump in the last quarter, and these stocks are going to rebound, particularly Lilly, Amgen, and some others. So we think we're still fairly early cycle there. In terms of compounding, we do agree that the agency is going to take a close look at this, particularly with FDA. And I know that Lilly particularly is working closely with the administration, the FDA, to get that shut down. So if that was going to happen over the next year or so, which we think is very possible, that would be another big catalyst to these stocks. And again, perhaps a concern for the compounders. So bullish on the GLP outlook, bullish on Lilly and Amgen and some of the small ones. And we do then believe that Lilly's working hard to get those compounders shut down.
And if shortages are ended by the FDA, is that also a benefit for Eli Lilly? Or do we know that consumers who get compounded drugs will switch to an Eli Lilly if the shortages are ended?
So 2 parts there. One is that the shortages, it has been removed off the FDA shortage list, period. The capacity and the supply from Lilly and others is generally there, particularly from Lilly. As it relates to whether people would swap, and there are estimates of, say, 10 to 20% or more of the market out there today is still compounded, that would be a huge positive tailwind to Lilly and others. So the numbers are a little bit murky out there. We do believe that a lot of them would switch, not all of them, because you can still pay out of pocket for some of the more branded forms. They're not compounded per se, but we do think that that is definitely a possibility this year, and that would be another positive catalyst to the GLP-1 branded stocks like Lilly and Amgen.
Michael, just lastly, as you're running the calculus across companies that are in your coverage right now, RFK, a net negative or remains to be seen, net positive for some of those names?
Good. First is that we have been calling for an RFK rally. That term relates to the Wall Street idea that these stocks and the XBI sold off dramatically since the election. If you go pull up the XBI chart since November and look at a lot of the big stocks, they have all had a pullback since November. We think a lot of this is typically more bark than bite. These stocks sell off, everyone's scared and worried, and at the end of the day, when he comes in, now obviously officially confirmed, that it won't be as scary as initially planned, and eventually these stocks move higher, particularly on fundamentals. So that is the idea. Overall, we do think that vaccines are going to be a particularly concern where you would not expect that to be sped up. You would expect that to be slowed down. That did come up today on the Moderna call. Secondly, we're a little bit watching Gilead, which is our favorite large cap stock. We've been raising the price target consistently over the last 6 months. Little bit concerned because HIV is a particularly sticking point with the RFK administration. Right. Regardless, we're watching it, but don't think that's going to be a big issue. Yeah. But really focused on vaccines. Otherwise, I think he's really going to be focused on food and nutrition, the other F of the FDA. So not too concerned about the biotech side.
Michael, one of the smartest voices that we've got on this sector. Thank you so much for joining us. Appreciate it.
Thank you for having me. Great.